I'm James Hepburn.
I'm Jack Roberts.
I'm Casey McLeod.
And I'm Casey Hamill, and we're doing BHP Billiton Limited.
BHP Billiton Limited's principal activities during the financial year ended 30 June 2011 included mineral exploration, production and processing of copper, silver, lead and iron ore and many others. The profit after tax attributable to the shareholders of the parent entity for the 2011 financial year included $23.946 million to the shareholders and $298 million was attributable to non-controlling interests of the BHP Billiton Group. The current CEO of BHP is Mr. Mario Clapis, who during the financial year ended 30 June 2011 was remunerated a total of $11,634,134. This comprised of fixed, short-term incentives and long-term incentives. Fixed remunerations included base salary, annual cash bonus, non-monetary benefits, and retirement benefits.
The auditors for BHP Billiton's group were KPMG. During the 2011 year, KPMG charged the BHP Group a total of $23.6 million. Now this included both fees for audit services and for other services. Fees payable to KPMG for audit services totaled $14 million and other services totaled $9.3 million. The BHP Group has 79 subsidiaries, of which 72% are 100% owned. BHP have no subsidiaries which are less than 50% ownership interests, and of the 79 subsidiaries, 39 are incorporated overseas and are classified as foreign subsidiaries. The BHP Group also has 11 jointly controlled entities and 23 jointly controlled assets.
As at 30th of June 2011, consolidated goodwill for the BHP Group totaled $370 million. BHP defined cash generating units as being the smallest identifiable group of assets, liabilities and associated goodwill that generate cash inflows separate to that of the cash inflow from other assets or asset groups. In addition, no impairment of goodwill was recorded during the financial year. In order to form a tax consolidated group, there must be a parent company and at least one other entity that is wholly owned by the head company. As previously mentioned, BHP wholly owns 72 other entities and on this basis is eligible to form a tax consolidation group. Because of this, BHP has prepared both separate and consolidated financial statements in accordance with AASB 127. Segment disclosures provide financial statement users with information required to evaluate the nature and financial effects of business activities within an entity. Under AASB 8 operating segments, an entity that is required to prepare financial reports in accordance with the Corporations Act and that is a reporting entity is required to apply the standards set in AASB 8. Because of this, BHP is required and has included within their financial statements a segment report. Paragraph 5 of AASB 8 states that an operating segment is a component of an entity that engages in business activities from which it may earn revenues and incur expenses, whose operating results are regularly reviewed by the entity's chief operating decision maker to make decisions about resources to be allocated to the segment and assesses its performance, and for which discrete financial information is available. BHP has applied paragraph 5 of AASB 8 by operating 9 customer service groups. These CSGs represent the company's principal activities and therefore are the basis for the entity's segment disclosures. The types of CSG groups include petroleum, iron ore, base metals, and other CSGs. In addition to the 9 CSGs, BHP further segment revenues and non-current assets within the CSGs by geographic regions such as revenue being located in Australia, the UK, China, and many other countries.
BHP has prepared financial statements for the year ended 30th of June 2011 in accordance with the Corporations Act 2001, as well as the Australian Accounting Standards issued by AASB. On this basis, subsidiaries, associates, and jointly controlled entities have been accounted for using the following standards: AASB 3, Business Combinations; AASB 127, Consolidated and Separate Financial Statements; AASB 128, Investments in Associates; and AASB 131, Interest in Joint Ventures. For the year ended 30th of June 2011, BHP accounted for its business combinations in accordance with AASB 3, Business Combinations, whereby it measured identifiable assets, liabilities, and contingent liabilities on the basis of fair value at the date of acquisition and using the acquisition method of accounting. BHP prepared separate financial statements in accordance with AASB 127, Consolidated and Financial Statements, whereby it recorded its investments in subsidiaries, associates, and jointly controlled entities at cost and in accordance with AASB 139. BHP accounted for its interest in jointly controlled entities using the proportionate consolidation method according to AASB 131, Interest in Joint Ventures, whereby it recognised the group's proportionate interests in assets, liabilities, revenue, and expenses of jointly controlled entities within each applicable line item of the financial statement. The diagram on screen illustrates the composition of the BHP Billiton Group. It shows the number of entities that are subsidiaries and the number of entities that are associates and their respective ownership percentages. Of the subsidiaries, all of them are over 50% owned, and within the associates, the percentage owned ranges from 20% to 57.5%.